Hold tight as we dive into today's pressing financial queries. Why are rental properties with low interest rates being sold off? What's driving the nationwide housing market crash? And how is Texas handling a surge in inventory? In this video, experts reveal critical insights and predictions that could alter your investment strategy. Stay tuned to uncover tips that could save your wallet and grow your portfolio. Don't forget to like and subscribe for more unbeatable financial advice. Today, on Real Estate in Review, we will summarize the following videos. From BiggerPockets, we have Why I'm Selling My 4% Interest Rate Rental Properties. From Real Estate Mindset, we have Zillow, New Home Meltdown, Nationwide Price Decline. From Real Estate Mindset, we have Texas Inventory Explodes 1,000%. This is crazy. Welcome back to another episode of BiggerPockets, the ultimate channel for real estate investors. Today, our host Chris Lopez has a fascinating dilemma, selling his rental properties despite having that delicious 4% interest rate debt. If your jaw just hit the floor, hold on to your seats because you're about to get the lowdown on why he's considering this move. Chris Lopez explores the idea that low interest rates and cash flow aren't the only factors when deciding to sell a property. By evaluating the return on equity and internal rate of return, he dives deep into why he might sell 2 cash-flowing rental condos. His goal is to optimize for growth and future cash flow, especially given today's high interest rate environment. Here are the key points discussed by Chris Lopez Property Performance. Chris purchased 2 condos in 2020 with 25% down, and both have appreciated significantly, from around $190,000 to $275,000 each. When analyzing performance, Chris focuses on return on equity rather than just cash flow. He's not thrilled with his current 9% return on equity, as it doesn't meet his double-digit target. Growth mode strategy. Part of Chris's decision-making is rooted in him being in growth mode, aiming for a higher net worth and future cash flow. Internal rate of return, IRR, for his condos showed a decline from a high of 55% in 2022 to around 25% in 2024, suggesting that the initial gains were front-loaded due to low interest rates. Scenario analysis. Chris considers 4 main scenarios: raising rents, cash-out refinancing, using a 1031 exchange to buy a new property, and selling to invest passively. Raising rents and cash-out refinancing don't meet his growth needs due to the current high interest rates. A 1031 exchange into a 4-plex in Colorado Springs and room-by-room rentals showed mixed results, the latter offering better growth but requiring self-management. Passive investment. Chris is leaning towards selling and investing passively in diversified opportunities like multifamily value-add funds, hard money funds, and development plays. This approach offers higher growth and better cash flow while aligning with his desire to be hands-off. Chris Lopez made the following predictions. Market opportunities. Chris suggests that the commercial real estate market is experiencing a 2008-style crash, creating opportunities to buy low while selling high in the residential market. Future cash flow. By investing passively, Chris expects an internal rate of return of around 22%, which could deliver about $20,000 per year in cash flow, outperforming the condos. Projected cash flow of $11,000 per year. Chris Lopez ultimately leans towards selling his rental properties and investing passively to optimize for both growth and cash flow. He urges viewers to consider their unique situations, goals, and market opportunities when making their own investment decisions. So, what would you do? Leave your thoughts in the comments and let the debate begin. Welcome back to Real Estate Mindset, where every day is absolutely bonkers. Today, we're diving deep into the latest trends and data about the new home market in the United States and discussing a concerning headline: Zillow, New Home Meltdown, Nationwide Price Decline. Your host for this motley ride is Travis, a no-nonsense guy who's all about integrity and helping people without charging them an arm and a leg. Travis addresses the current state of the new home market, suggesting that new home sales and prices are in free fall. Builders are reducing prices and offering various incentives to lure buyers as construction rates plummet while inventory piles up. Here are the key points discussed by NA Home Sales data. In May 2024, new home sales fell to 69,000 units, down 11.3% from April and 16.5% from May of the previous year. The median sales price for new homes is now $417,000, a 0.9% decrease from the previous year. Incentives from builders. Many builders are offering mortgages with rates as low as 4%, along with other incentives like closing cost assistance, refrigerators, and washer-dryer sets. Around 25% of builders cut prices to boost sales in May, with average price reductions holding at 6%. Inventory and construction. The monthly supply of new homes has skyrocketed to 9.3 months, signaling a buyer's market. Permits for new home construction have dipped sharply, and the number of housing starts is now at a 4-year low. NNA made the following predictions. Short-term market outlook. The inventory overhang and reduced construction begins may presage further price declines and financial stress for builders. Long-term construction trends. Despite a temporary dip, long-term construction activity may eventually recover, but builders must adapt to new market realities. In conclusion, Travis warns that the data indicates new home sales and prices are experiencing significant declines, leading to a plethora of incentives from builders. He emphasizes that potential homebuyers need to do thorough research and look at actual comps to ensure they're getting a good deal. Also, there's a call to action for buyers to be cautious and patient, waiting for further price drops before making a move. Welcome back to Real Estate Mindset. Today, our solo host Eric Nelson is digging deep into the Texas housing market, where inventory has surged by an astonishing 1,000%. Prepare for an info-packed ride as Eric unpacks why this matters and what it could mean for housing prices. Eric, who's got a keen eye on real estate trends and also battles Lynch syndrome, brings you all the latest updates while reminding us to keep things in perspective. The core thesis of this video is that the Texas housing market is experiencing a significant surge in inventory, which is expected to lead to price declines. This trend is discussed within the broader context of affordability, migration, and new home construction, highlighting Texas's unique positioning compared to the rest of the nation. Here are the key points discussed by NUN Texas Inventory Surge. Texas has more inventory starts and permits for new home construction than during the Great Financial Crisis. Current inventory levels for both new and existing homes have reached pre-pandemic figures, a first for any state. Price declines in major Texas metro areas. The only 4 metro areas in the nation with year-over-year price declines are in Texas: San Antonio, -2.5%, Austin, -2.5%, Dallas, 0.9%, and Fort Worth, 8%. Houston, while not yet showing price declines, has the highest decline in pending sales, suggesting it might join the list soon. Factors influencing the market. Despite migration propping up some areas like Dallas and Houston, even these cities are beginning to see price drops. Affordability issues, including an increase in the percent of income renters must allocate to housing costs, are becoming more pronounced. NUN made the following predictions. Continued price declines. With inventory levels remaining high and demand insufficient to absorb the excess, Eric predicts ongoing price declines across major Texas metro areas. Houston, in particular, is expected to see price drops as well, despite its current stability due to high migration. Increased affordability issues. As the cost burden continues to rise for both renters and potential homebuyers, more Texans will struggle to achieve homeownership, particularly in urban areas. Eric wraps up by emphasizing the importance of considering inventory levels, migration patterns, and new home construction when assessing the housing market. He underscores that while Texas currently leads in price declines, the broader trend is one of increasing unaffordability. His final call to action is clear: stay informed, be patient, and make smart decisions in the real estate market. Chris Lopez explained his rationale for selling rental properties despite low interest rates, emphasizing the need for growth and future cash flow via passive investments. Travis from Real Estate Mindset highlighted a nationwide price decline in new homes, stressing the importance of market research. Eric Nelson discussed Texas's inventory explosion and predicted further price drops. The overarching thesis: in today's turbulent market, one must weigh growth potential, cash flow, and market conditions carefully. Both Travis and Eric see inventory issues leading to further price declines, while Chris suggests passive investment for higher returns. Opinions differ on the immediacy of opportunities. Chris is bullish on commercial real estate, while Travis and Eric are cautious about the current market stability. Thanks for watching Real Estate in Review for July 4th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.